Time to see what's on the radar for Steve Rowles, Senior Portfolio Manager at TriVest Wealth Counsel, Wellington-Altus Private Counsel. And there's a few buys today for us. Alphabet's up first. Why are you liking that?
I've been a big fan of Google. It's one of my favorite picks from last year. They were not one of the top picks overall last year for many people because of the AI situation, because they felt that they were a little bit behind. But I kind of looked at it, well, who's got the most data in the world than Google? And you can tell by the chart there that it's done extremely well. And but most recently, there's been a dip. And what caused the dip was the overall reaction to their phenomenal view on their CapEx spending that's coming up.
Yeah,
very common.
I mean, it's insane, the CapEx that they've committed to for this year.
Unbelievable. I think it went from like 40 billion up to, I think 185 billion.
Yeah. Well, no, and I think it's even now for 2026, they say for which, I forget which group of them, but like 450 billion.
We're getting up to $1 trillion. And that's why there's a big impact on the U.S. economy, because the AI cap spend to me is not a red flag. It's an opportunity.
Okay.
But I do think that some of these pull downs because of it is a good thing. I think that means that we're questioning what is happening. And are people overspending, that we don't want to have another .com situation. But companies like Google, who are part of the infrastructure for our modern day way of communicating, they're going to be the infrastructure for AI. And that's why they're spending. And with their cash flow, that is just astronomical as well, they're able to spend this type of money. Yes, they're doing a 100-year bond. Yes, they've stopped buybacks, but there's still cash flow. It's just unbelievable.
There was a lot of interest for that 100-year bond, though, too.
Exactly.
I mean, huge. 10 times the offers, right?
And Oracle, same thing with their bonds. So there's been a lot of rhetoric, but some of it justified. It's always good to question. But it's always, when you're seeing a dip that we've had recently, I think it's a good buying opportunity.
Now, do you think they can all be winners in this? Is there room for all of them to kind of be winners in the AI race? Or could we see a TELUS, or not a TELUS, a Nortel or BlackBerry, something like that, where there's got to be a loser?
It's very difficult to say, because we're starting to see, like, Microsoft is another poster child of it. But where Microsoft, with the cloud computing, they're going to be hosting and making money off every single AI agent that is coming out there. So that's what they're spending the money for. So I think there'll be multiple winners, but I don't think there'll be the numbers are too big for a new company to come in, so there's a bit of a moat there. But I think looking at the Amazon and Microsoft and Google will continue to do well here. They proved it with their cloud, and this is I'm looking at this as like a 2.0 of the cloud, so it's sort of extension of that.
All right, let's. We got a couple more we want to get to. A little variation here. Honeywell,
old school industrial.
Yeah.
This is a situation where breaking up is easy to do. Looking at the examples that we're seeing across many other companies, such as GE, that they're splitting their company up into 3 different companies. They've already moved the materials company side, and over the next few months, they're going to be splitting the aerospace and automation into 2 different companies. But they're great leadership, and they're taking leadership in many spaces, and they're actually part of the quantum computing aspect as well. They're a major investor in an interesting company called Quantinuum, and that's going to be a situation where they're going to IPO in about 6 months or so, perhaps. We're not too sure, but there's going to be a lot of cash flow coming from that. So they've really innovated themselves, and by separating it into 3 different companies, I think splitting it up, it's going to be worth more than it is today. So it's proving that, and it's sort of the way of the future now.
Now, do you think quantum is the next AI, or is it going to be a part of? I mean, it's to try and understand it. I think most people don't. I've read it and I've started to read up on it, and you get what they do, but you don't fully get, and you're trying to see where it's going to be applied, the applications for it.
100%. And looking at quantum, it is a pathway forward that AI is going to lead to quantum. So all this money is really heading there, and so that's why I think the Googles are going to benefit from that. But the way I look at quantum computing is, old school, go to a library and look at the card catalog and try to figure out which book you're supposed to read. Well, that's the internet. Talking to a librarian who's read all the books, to me, that's AI.
Yeah.
And quantum's going to allow you to read all the books at the same time.
Boom.
And that's where we're at.
Let's get one more in here. Aritzia, we're really running the gamut here. It's a little fashion for us now.
Yeah, well, I think it's Canada's greatest company that we've seen over the past 10 years. It's
really? Okay.
Well, we don't have many IPOs in this country, and it's a situation where it's IPO'd, I guess, about 10 years ago, and just a phenomenal growth story. And the revenues in the U.S. are really picking up. I think they have, 139 stores, and about half of them are in the U.S., half of them are in Canada now, but expect to open up 10 more stores, and it's just so prudently managed. Fashion is a very difficult business, but
Absolutely.
But when you're managing, it's a public company, but they're managing it like a private company still. So everything is very prudently managed. It's fiscally responsible, and the growth rates are phenomenal. Just did over $1 billion of sales last quarter, and projections are great. So I'm very optimistic about that growth company.